But what about the medium term and long term view, and which is the space which is still showing some sort of investable, universe? Let's try and decode that with Varun Lohchab. He joins us, of course, from HDFC Securities. Varun, hi. Thanks so much for making time and speaking with ET now. Let's begin by discussing the market momentum itself. What's the market view right now? Because a lot of participants were talking about how, it seemed like there's a runaway rally and the month of September is going to be very well ahead of the festive season, the rural recovery. What's your own outlook in terms of the near term as well as medium term on the market?
I think near-term markets are looking sort of fully valued, which has been our call for last 2-3 months after this rally to almost 20,000 levels on Nifty. From here on, I think upsides over the next 6-9 months at an index level look fairly limited. That's why the action shifted a lot to small and mid caps. Definitely at the beginning of the year, they were looking much attractive than the large caps, which was our call. After this move, frankly, even small and mid caps is not looking like a basket case. Things have moved up out there, but I think still we are able to find some investment ideas across all market caps. But I think one should moderate or temper down their return expectations from market over next 6 to 12 months, and probably even little bit longer than that, given the fact that now earnings have completely normalized across sectors, and therefore Nifty earnings after FY24 will not be able to grow at anything more than 12 to 13% in our view. And while valuations look only slightly above averages, as I said, you have to keep in mind that the earnings now are much higher than what they were in any time in the last 5-6 years when earnings were depressed across a lot of sectors. So if you put both these things in context, then I think return expectations from here on should be moderate. And if that's the case, you are still able to find investment ideas across multiple themes and sectors. But I think one has to be prepared for some bouts of volatility in between, because this sort of a strong up move in small and mid caps may not continue at this pace, and there might be some volatility towards the end of the year and going forward.
Okay, so keep realistic return expectations from the market here on, and the mid-cap volatility might come into play at least in a few months' time. But Varun, you talked about earnings, and that point is taken. But are you completely ruling out the possibility of a pre-election rally? Because that's been the historic trend of what, a 10-15% move ahead of that?
I think we have already seen that in the from March to September, October. So everybody was expecting that probably there will be some more consolidation for next 6 months, and then we might have a pre-budget pre-elections rally. But it seems like that has got accelerated, and it happened in the first 6 months of this financial year itself. So from here on, I would be surprised if we get another 15% rally in the next 6 months.
Okay, so you believe large part of the rally has already played out in the last 3 months itself, and yes, it has been a very solid recovery that we have witnessed in the market from the March lows itself. But Varun, let's get sector and stock specific. You said that you're finding investable ideas still across all categories. Let's start with the large cap ones then. Which are those pockets of stocks that you like within the large cap category?
So in terms of, we are still able to find investment ideas across most sectors as well as market cap. So when I look at, say, the big sectors, thankfully, the two largest sectors, banking and IT, which are together 50% of the Nifty weights, they are not looking, hugely overpriced. So valuations are reasonable in both of them. And therefore, we have a few investment ideas across banks, across NBFCs, things like, Axis Bank, ICICI Bank, we still like, among NBFCs, Chola has been one of our top pick, even though it has moved up sharply. But, we are positive on the medium to long-term prospects out there. IT, we like, again, in large caps, Infosys seems fine to us after the weak performance in the last 2 quarters. So valuation wise, that's looking good. Among the mid caps, we have LTI, Mindtree, Persistent, which have now no longer mid caps. They have become fairly large companies, but they are one of our top picks in the IT sector. And then some of the themes which we believe we are more positive on from an economy perspective, and where there are probably greater tailwinds, are things like the whole investment theme. We have been fairly bullish on that over last couple of years. We have been preferring that over consumption. So out there, sectors like infrastructure, which is construction, capital goods, power and utilities, real estate, building materials. So these are all sectors where we are positive, and we have been running a overweight in our model portfolio.
Okay, so
And
lot.
in fact, in all of them, there are enough ideas across large cap as well as mid and small caps. In fact, some of them there are more mid and small cap ideas, and we are preferring those. Another such area is exchanges, where there are only mid caps, but we like that space as well, where you have MCX and BSE.
Okay, so Axis Bank, ICICI Bank, Chola, LTI Mindtree, Persistent, these are the topics within banking and IT pack which still look reasonably valued, and within the capex theme there are a lot of ideas as well. But that is what the point I wanted to scratch further with you, Varun. When you say that there's still a lot of ideas within capital goods, the likes of defense, railways, even power for that matter, has seen quite a bit of run up. Which are those names that still come to mind as investable ideas?
So you're right. It's no longer a basket case. As I said, the same stock picking 6 months or 1 year back was much easier in those spaces because they were not discovered. Now, obviously, a lot of the stocks are looking expensive from a next 12-month perspective. So that's why we said, one needs to have more moderate return expectations even in some of those preferred themes. But say some names like Cummins, NCC, Showa Developers, DLF, these are still, stocks, NTPC among the power utilities one, CESC. So these are some of the ideas where, as a house, we are still positive, and we have them as part of our model portfolio.
Okay, Cummins, NTPC, CSC, still some of the names and pockets where you still see some sort of upside left. But Varun, consumption, that's a space that you track very, very closely, have been tracking for many, many years. Tell me the reason of being underweight there, because at least the premium consumption seems to be picking up, whether it's in terms of QSR or hospitality, even, the buys, the premium buys like Ethos, Landmark, etc. What within consumption looks weak to you?
No, so I think the reason for being underweight on consumption are actually twofold. One is the relative picking, where can you make more money. So while it's not that in consumption we are not positive on anything, but just that we have less investment ideas from consumption space, because because we were finding more attractive and greater earnings traction in the non-consumption or the investment theme space. Second part was the valuation. The starting point of valuation in some of those other sectors was much lower, and even today, I think consumption stocks are trading at fairly rich valuations, especially the consumer discretionary ones, where structurally I think the tailwind is there, but valuations is a concern in some of the themes like USR and other consumption themes. So from that context, we are underweight. So you are right that premium consumption is doing well, but we believe those stocks are anyway pricing that in, and therefore we are not able to kind of have high conviction on some of them, or margin of safety is slightly on the lower side right now. But we do like some names like United Spirits is one of our topics in the consumption space, and then in discretionary space we like Crompton Consumer, which is part of our model portfolio along with United Spirits, and then hotels as a theme we are positive on. We have a positive rating on both Indian Hotels and Lemon Tree. Yeah. So, but there are only few. I would say that there are fewer names in the consumption on the consumption side compared to on the investment and infra side, and therefore slight preference still tilted towards non-consumption stocks.
Okay, so stretch valuations is something which has kept the margin of safety a bit lower for the consumption names, but still, of course, there are names like United Spirits, Lemon Tree, Indian Hotels, and some of the marquee consumption themes that HDFC Securities is still positive on. On that note, Varun, we let you go. Appreciate you making time and speaking with us today. So that was the house. You